did MSTY just get dethroned from the top of the income ETF mountain? The answer, maybe. Maybe. I know I'm shocked as well. I'm sure it's shocking to hear that. It's very hard to believe that after this incredible run, we finally see a competitor that could possibly knock them off. Now, I'm going to go over my reasons why. I'm going to reveal the ticker. It's not on the market yet, but this is a Roundhill fund, and the ticker is MSTW. Now, they recently filed with the SEC, and it's dated May 16th, so this is very recent. This is not on the market as of the time I'm making this video, but it's going to be hitting the market soon. So I'm going to go over some things I found in the prospectus and the filing, and I'm going to give you my reasons as to why I think this is possibly a superior investment vehicle compared to MSTY. All right. Now there's some possible downsides, so there's other things to consider. And yes, it's not on the market yet, so keep that in mind. So what this is this is a Roundhill MicroStrategy weekly pay ETF that is leveraged. It's leveraged 120%. It's supposed to provide calendar week returns, and it does not use options trading. Okay, so we're not going to have the big caps that we would see with an options fund like MSTY. That's the first point that I want to make, where we could see some potential capital gains that we wouldn't see with MSTY, right? Which is, in my opinion, one of the biggest detractors to that fund. So I feel like this has a big advantage in that way. The management fees, 99 basis points, is pretty similar to what you're used to if you invest in these type of vehicles. I feel like the 1.2 leverage is not overdone. I think Roundhill nailed this pretty well. If it was 2x leverage, I'd be very concerned. I would think that's too much. If you see a big drop in MSTR, you could really see some big losses, and that would be very concerning. But 1.2, I feel like they got that number pretty good. Like that's a pretty good number and leverage that they're using. It's not overdone, but it's enough to kind of make up for those distributions that are going to be happening in the fund. So they use swap agreements for exposure to the underlying. Again, they're not using options chains, so you're not going to get the caps on the capital gains, right? So we can capture that, and it could actually gain more because of that little bit of leverage than the underlying stock. Although it's not capped, it is further leverage, so there is some risk. I don't believe that the risk is way too much, for my personal taste. Again, if it was something like a double or triple leverage, I would just stay away from it. But there's just a little bit of leverage. In the case of a downturn market, I feel like 1.2% leverage isn't overdoing it. So what you want to consider with comparing this to, say, an MSTY is, now MSTY, one of its strengths is the implied volatility driving those distributions, right? So it's kind of baked into the yield, that volatility, and that's one of the strengths of MicroStrategy. Now, the current volatility on MicroStrategy is 66%. Of course, that can fluctuate. It could be higher or lower at any time. We are really going to get more of the capital gain side because of the leverage without getting capped. So the strength in Roundhill's fund is in capital gains and not so much volatility. So if it's enough to overcome that, right, because that volatility is kind of baked in. However, Roundhill came up with a way to kind of alleviate that concern also. to kind of make profits or distributions off that volatility through the use of a formula. Okay, so it says right here in the filing, the amount of each week's distribution is based upon a formula that incorporates a number of dynamic market-based inputs, including the recent total return of MSTR. I'm going to assume that's weekly because this is a weekly ETF. And then the implied volatility of MSTR shares. So you are getting, some sort of play on that volatility of MSTR, which is MSTY's biggest strength, or one of their biggest strengths, in my opinion. And it looks like they have kind of found a way to incorporate that volatility into the distribution. So this makes it potentially much better, and in my opinion, can compete with MSTY, possibly even beat it, as far as total returns go. So MSTW, I would say the biggest difference between MSTW and MSTY is MSTW is if you are bullish, which I would assume if you're investing in Bitcoin or strategy, proxies, or derivatives, that you are in fact bullish on it. And I would say that MSTY is more of a bearish play in terms of total returns and beating the underlying. Now, that doesn't mean you're not bullish on MicroStrategy or Bitcoin when you buy MSTY, but what I'm saying is that's when MSTY could actually outshine the underlying, is when you have a down market, possibly a sideways market. Although it's tough to say whether in a sideways market MSTW actually performs better. It may. Again, that formula is based upon volatility also. Capital gains, you're not going to have a lot of capital gains, obviously, if in a sideways market. But that would be the question for me, although, it's up and down so much. I'm not, overly concerned about a sideways market that lasts that long as far as this, ETF is concerned. So that's really, my question is, and it's kind of vague, right? The distribution is based upon a formula, and we don't really have, a clear definition of what that formula is. So that's the big question mark, is how well does it harness that implied volatility? And, how much are these distributions going to be? But I believe in total returns, I believe that this has a really good chance of beating MSTY. So there's a few ways you could play it. Now, if you are bullish, right, on the underlying, which I assume you would be if you invest in these vehicles, well, you could go the majority, say like 2/3 into MSTW, and just in case we have a bear market in Bitcoin and there is a significant drop, although I don't necessarily foresee that, anything prolonged anyway, you can go like put the minority of your money into MSTY, right? Because that's more of the bearish play, where if the underlying is going down, you could actually outperform it. Okay, so you could do something like 2/3, 1/3, 3/4, 1/4, however you want to play it. Or, and this is not the way I would do it, but you could maybe possibly look at timing the market. And when you think, Bitcoin's about to drop, it's about to go into, the winter, which I am not sold on, by the way. But if you do believe that, you could try to switch into MSTY. You still get distributions. You could outperform the underlying in a bearish market, right? And then let's say it drops, hits the bottom, and it bounces, then you can shift to MSTW and, get that ride on the way up, and you're more bullish, right? So there's a couple ways you could play this. You could use a mix of both. Now, I don't want to sell out of my MSTY, although I think this has potential to outperform it in the long run. I want to hold on to that. And, I do see some times where in the future where the underlying, dips for a while and maybe it stays down for who knows how long. But, I do see some points where, Bitcoin takes a bit of a plunge. And, I think MSTY is still going to do well in those cases. And then, but I'm mostly bullish. If you're a Bitcoin maxi or a bull, then, MSTW may suit you better. So, and like I said, again, I'm assuming that's what you are if you invest in these products. So there's a couple ways you could play it really. Now, one of my biggest concerns about MSTW is, will the yield decrease over time with potential rocketing capital gains? That would be my biggest concern with MSTW, and it really comes down to how well will Roundhill manage this through the use of this formula that they incorporate. How big will those distributions be? Will it maintain that NAV? Because if we see a skyrocketing NAV, I would say that it's not really as suitable for income investing, because you want to reinvest into it and you want to get more shares. But if they're not paying out enough distribution to keep that net asset value reasonable at a reasonable price, then it kind of hurts your prospects for reinvestment. So that's the thing that I would really want to monitor and make sure, like whatever this formula is, however they're managing this fund, is Roundhill going to keep that NAV, from going crazy and the yield dropping and plummeting because of all the capital gains that you're getting through that leverage. So if they can do that, if Roundhill can keep this NAV from, going crazy and running away because of the leverage, and they can increase those distributions to an adequate level to come out of that NAV, that stock price, then I would say this has a great chance of outperforming MSTY and basically dethroning it. I know this is crazy. It was a great run from MSTY. It's over a year. It's outperformed, the S&P. It's outperformed Bitcoin. It was an incredible run. And hey, there's still some questions here, right? And like I said, this is not yet on the market. We don't have any real world data. We have to see how this performs, but I'm going to go in with some shares in the MSTW when it launches. I'm going to get in quick, and I'm going to monitor it. And it's possible that I, grow my position in MSTW larger than MSTY. I may go with this fund. I don't plan on selling any MSTY, at least, initially. I want to see how this performs. I want to compare both of them and see how it does over a long term. And then I'll make more decisions as it, based upon how it's performing, and not just guessing, based on some vague formula that they came up with. So I hope this does well. I'm very interested in this. I can't wait for it to launch. I can't wait to buy in and see how this thing performs.